Executive Suite with WPRI.com reporter Ted Nesi.
It's common knowledge that payday loans can trap people in a cycle of debt.
It just kind of perpetuates. You're paying that off, and then you're needing that money that you just paid it off to pay for other things, and it just never ends.
The Capital Good Fund wants to change that. The Providence-based nonprofit provides microfinance services to low-income Rhode Islanders and has national ambitions to fight poverty across America. Now, inspired by Twitter going public last year, the Capital Good Fund is proposing its own IPO, what it calls an immediate public opportunity to address poverty that will raise cash to fund its expansion. This week on Executive Suite, the co-founder and CEO of the Capital Good Fund, Andy Posner.
Welcome to Executive Suite. I'm Ted Nesi, and I hope all of you are good and dug out from the latest round of winter weather that my colleagues here have been reporting on so much. Andy, thank you for being here.
Thanks for having me.
And Andy, you're doing some fascinating stuff, and I must say, I don't think I've had anyone recommended to me more as a guest. The number of people said, you got to talk to the Capital Good Fund.
I'm glad to hear that.
They're doing interesting things, so I'm really glad we could have you today. But let's start simple. There are probably a lot of people out there who haven't heard about the Capital Good Fund. What is it, and what do you do?
Yeah, so we're a nonprofit, but we're also what I call a social change organization, and we do financial services for low-income Rhode Islanders. I actually started the organization 5 years ago while I was at Brown. We celebrated our 5-year birthday last Monday.
Happy birthday.
Thank you very much. And we empower people across 3 product lines. So we do one-on-one financial and health coaching. We do free tax preparation through a program called IRS VITA. And anyone whose household earns less than $52,000 can get their taxes done for free by us or any organization in the state that's a VITA site. And then we also do small personal loans, including a payday loan alternative, which I'm sure we'll be talking about.
And that's where we actually had you from. We covered that last year on Eyewitness News.
Exactly.
I want to hear a little more about how it came about and what led you to found the Capital Good Fund. I know you're a big believer, and you talk very clearly. Your mission relates to inequality and fighting poverty. Yet a lot of what you're doing will remind people of a bank or a credit union. So, what gave you the idea for this, and why do you think the work you're doing is an important part of how you address that bigger problem?
Yeah. So it was actually interesting. I came out here in 2007 from Los Angeles to get my master's at Brown, and I was working on renewable energy financing, and then there was a little thing called the Great Recession, and suddenly I saw a need for financial services to help people move out of poverty. And I think what's really empowering about financial services is that they touch on every aspect of people's lives. So I dare you to find something that doesn't have a financial component. So we work with a lot of people, for instance, who are suffering from domestic violence, and one of the things you find is that they can't afford the security deposit on a new safe apartment. We'll provide a loan for that. You have people who are temporarily homeless. Now they get a job, but they don't know how to budget. They don't have a bank account. And so financial services become something that can actually have an impact on life and death, on physical well-being and quality of life.
And what you do is called microfinance, and you
Yes.
spoke a little to that, but I want to talk more in detail about the 3 big buckets of services that you offer. The first is financial and health coaching. Maybe an example. How does that work with people, and who uses it?
Sure. So a family can come to us and we can help them do basic things like build a budget, a debt management plan, which can really reduce stress. We'll look at their credit report and figure out how to build their credit score. We'll look towards building a savings plan for their kids to go to college. But I want to back up a second just to talk about why does this really matter? And I think the first thing is that 1 out of 3 Americans are at 150% of the poverty line or below. So they're basically at or near poverty. They're one pink slip away from being temporarily homeless, from going hungry. 1 out of 6 Americans are food insecure. And that's concentrated, of course, among lower income families. We have programs where 60% of our clients are food insecure. You compound that with the fact that there's a $100 billion a year industry that provides predatory financial services to these families.
Payday loans, of course, being the most prominent example.
Payday lenders, check cashers, pawn shops, rent-to-own stores, refund anticipation lenders, and auto title lenders. It's sort of this cabal of financial injustice. And they exist because mainstream financial service providers like banks aren't terribly interested in serving these clients because it's not very profitable. Mm-hmm. So we're really one of the few nonprofits that have stepped into the breach to try to serve this population. And so there's a tremendous need, and we're also very unique. No one really does what we do, and I'm really proud that we started in Providence. We now have an office in Woonsocket and an office in Hartford, but we'll always be headquartered here. Which I think is a good story for the state.
You know, going back to what you're saying there, I mean, part of why you hear banks don't approach people, they call them the underbanked a lot of times, the unbanked,
Yep.
people who just aren't engaged in mainstream financial services, is because, you know, sometimes their lives can be transient. Sometimes if you're between jobs, it can be difficult to have enough money for an account to be profitable, et cetera. I mean, it also can be just difficult to find those people and get them to interact. How do people find you, and how do you find people who could use these services?
Yeah, it's a good question, and it's always a challenge. So we have a great network of community partners, United Way and the Catholic Diocese and so on, that refers people to us. So for instance, if you go to Rhode Island Legal Services and you're dealing with domestic violence and you need that loan for security deposit, they'll send you to us. We also do a lot of radio and TV interviews like this. We'll go out into the community and do presentations. But it's a challenge because you go into any low-income neighborhood in the country, and certainly in Providence and Rhode Island, you'll see all these bright neon signs, quick cash, easy credit, and they have a brick and mortar infrastructure that it's hard for us to replicate. So we're really trying to divert people from those predatory places.
How much is it also embedded in how a lot of low-income Americans just manage their money, and how people in their community have managed their money historically, because that was all they had available to them? You have to change habits, right?
Absolutely. And you know, I'm middle class, and my parents taught me financial habits. And when you're low income, it's tough. You don't have behavior that's been modeled for you, but also when your life is so uncertain, when you're living paycheck to paycheck, oftentimes you go to these predatory services because that's what you need to put food on your table or keep the lights on. And so, you know, we try not to judge people, but we also try to empower them with knowledge to understand how to navigate what is a complicated financial landscape, right? I mean, you look at all the products, I mean, you look at the subprime crisis, those were companies that were knocking down people's doors trying to get predatory mortgages in their hands. And so it's hard to blame the people who, in desperate situations, take advantage of that.
Of course, yeah. And before we go to a break, I want to ask about the other two services. Small loans you provide. What types of loans, and what, you know, we hear about these high APRs for the payday lenders. What sort of interest rates are you charging on those?
Yeah, so we do emergency loans that compete with the payday lenders. Those are $300 to $500. We charge 30% and a 4% closing fee, which may sound high, but the payday lenders charge $260. And our loans help people build their credit score. We're very flexible, and it's not that much interest over a year. Then we do sort of what we call our standard consumer loan. Those are $500 to $2,000. That's a 20% interest rate with a 4% closing fee. And people use that to buy a computer, pay for applying for U.S. citizenship, security deposit on an apartment, making their home more energy efficient. So really transformational purposes.
And, you know, someone might listen and say, why are they charging interest at all? They're trying to help people. Why charge them interest then?
And you know, we get this sometimes, not from our clients because they get it, but here's the thing. When we look at scaling these sorts of services and the social sector, every dollar I lose on a loan is a dollar I have to raise through philanthropy. By charging 20% is the lowest rate we can charge while still operating the loan program like a business. So people like you can lend us $500, we'll pay you 1% to 3%, we'll then lend it out at 20%. And the program pays for itself because it's hard enough to grow dependent on philanthropy. And that's really why we charge the rates that we do.
All right, the third one is free tax prep, which you kind of referenced already. So we're going to take a break. When we come back, we're going to talk much more about payday loans and what the Capital Good Fund's doing now to try to build their organization and get bigger. So stick with us on Executive Suite. Welcome back to Executive Suite. I'm Ted Nisi, and my guest, I'm pleased to be joined by Andy Posner. He's the co-founder and CEO of Capital Good Fund, a not-for-profit that provides financial services to lower-income Rhode Islanders, Americans, hopefully over time as you expand, but has a lot of a for-profit mentality in how you do it, in the best sense of the word,
yes.
Hopefully. So you partnered with the United Way. Actually, we were there, I think, in Woonsocket last fall when you
Yes.
opened this alternative to payday loans. Obviously, payday loans a big deal up there in Woonsocket with their economic troubles. How much is, if someone walks into the Capital Good Fund office there, how similar is it to what they would go through if they went to a regular payday lender, and what's different?
Yeah, so the first thing I'll say about payday lending is that in Little Rhode Island, they do about $70 million of revenue. This is a big business.
Yeah.
And so what we're offering is we call it an emergency loan. These are $300 to $500. You can apply today within 48 hours, get your loan. You pay back over the course of a year, at 30% plus a 4% closing. So you're paying maybe $100 of interest. Contrast that with how payday loans work. The idea is that you come in, you need a small amount of cash, similar to us, and you give them a post-dated check. So the idea is you're going to pay them back with your next paycheck.
Yeah.
Now, their business model only works if you get entrapped in debt. 260% interest over 2 weeks just isn't enough to be profitable. The average person, after 2 weeks, comes back and has to roll that loan over.
As we heard that woman say at the start of the show.
Exactly. The average person rolls it over 7 times. And what that means is that you've now got the principal rolled over and the interest you owed. And that's how they make their money. It's a wildly profitable business. What's more, they don't have to really do much due diligence on the application. When you charge that much money, life is good in the sense that even if a lot of people default, you're still going to make money. We factor in, do you really need the loan? Can you afford it? Are there other alternatives? And so in that way, we're much more equitable. Our interest is aligned with the needs of the client.
Let me ask you, the payday lending industry obviously has some powerful backers in the state. Former House Speaker Bill Murphy is their chief lobbyist. Lisa Beverly Hunt, the mayor of Woonsocket, her family's all tied in with that industry. I mean, the argument they put forward that I think at least resonates with a lot of people, at least at first, is, we're providing, you said yourself, a lot of these folks in these situations economically are unbanked. They don't have a Bank of America debit card or something to apply to. And these payday lenders say, look, we're providing a service these people need to live their lives. If we weren't there, they would lose their house, they would lose their mortgage or whatever. Right. So banning us, you're actually taking away a needed thing these people are choosing to use. What's your response to that?
Sure. So the first thing is the argument that they're here to help people. I mean, they're a for-profit looking to make money. There is nothing wrong with that. But normal free market forces are not at play. If they were, you'd see competition on interest rates. No one's trying to charge less than 260. They're all charging the same rate. But like I said before, there's a problem when your business model depends on basically taking advantage of people. Mm-hmm. The other thing is, this product didn't exist before 2001.
In Rhode Island.
Yes, but even before in the nation, the idea of payday lending was just one of these new financial instruments that people came up with to make money. Before that, people were meeting their needs just fine. In fact, the abundance of the availability of these services is what has put people into more of a hole. The Pew Charitable Trust, which is a very respected research institution, has found that in places where you ban payday lending or cap the rate at 36%, which is what we want to do, but it will drive them out of business. In those states, the vast majority of people just stop taking out these loans, or they find out an alternative. In very few instances do you find that people truly need these loans, and we're existing in part to show that there is an affordable alternative so that when we do pass this legislation, people will have somewhere to go.
One of the questions, another question I see people having is, well, great if I'm near that one Woonsocket outpost you have up there that you opened with United Way, but there's a payday lender everywhere and it's easy to get through. Is your model scalable? And I think this is part of why we're going to get into talking about your IPO idea. But could there be enough capital good fund outposts or things like it to help people, to give people what they need?
There definitely can be. Not at present. We need a large infusion of capital ourselves, because we're a business, even though we're nonprofit, and we're starved of the money we need to make the investments we need to grow. So Advance America and Check and Go, the two main players here, they're national companies. They have a lot of money behind them, and they can use that to build storefronts, to advertise, to hire personnel. If we had that money, then we have a business model that we can run this sustainably and at scale.
How's your loan portfolio? Do you find, are people paying back the loans that you guys put out there? Are you too good-hearted that you give them out to people who shouldn't get them?
Good question. So certainly over the first couple of years, we did a lot of learning, which means we made some bad loans. Over the last year, we've seen 95% repayment rates, even though the credit score of our borrowers is typically around 590. And you would expect, given that credit score, delinquency rates or people being late about 30% of the time. So we're really outperforming what you would expect.
And talking about scale and capital, as I said, that gets to this IPO you're doing. It's not an initial public offering, though that's the clever thing you're basing it on. It's an immediate public opportunity. You're looking to raise at least $100,000, you said, by issuing 4,000 social innovation shares. Where's that money going to go? I think you've alluded to it, but give people a better sense. If someone helps to donate to this, where does the money go? What are you going to do with it?
Right. So this is one of the key things. People typically want to donate and they don't want it to go to overhead. They just want it to go directly to programs, which is fine, except it's a bit of a misnomer to say something's overhead versus programs. Is the receptionist overhead if without her you can't take calls? Is the data system you need overhead? I would argue not. And while we can raise money to meet payroll every month, I don't have money to do marketing, to find more customers, to build the data systems I need to grow, to hire new personnel. And this money is going to allow us to make that kind of an investment, just like you would if you invested in a startup for-profit. You're expecting to lose money for a while they grow. Amazon lost money for 7 years. So we're just asking to let the free market work for us the same way it does in the for-profit world. One of the things we were just talking about is how since 1970, 140 nonprofits have reached the $50 million revenue threshold. About 140,000 for-profits have done so. When you think about the fact that we're trying to do something, I would argue, more difficult than selling widgets, and we're constantly under-resourced, you see why we have this endemic, persistent poverty problem in the country.
All right, we have to take another break. When we come back, we're going to talk a little more about Andy's critique of how not-for-profits work now and what they need to do to change and be more efficient. You won't want to miss that. Stick with us on Executive Suite. Welcome back to Executive Suite. I'm Ted Deasy. My guest this week, Andy Posner. He is co-founder and CEO of the Capital Good Fund, which you can learn a lot more about on their website. What's the website?
CapitalGoodFund.org.
.org. All right, easy to find, or you can Google it. We usually have for-profit enterprises on this show, Andy, but I was reading some of the things you've written for Stanford Social Innovation Review, which is a publication that looks at enterprises like yours. You quoted a TED Talk in a positive way where someone said, quote, "The way we think about charity is dead wrong." What does that mean, and why did it resonate with you?
Sure. So one thing I want to clarify is that being a 501c3 nonprofit is just a tax status. But people have also turned into a philosophy that you should be conservative, that you shouldn't spend much on operations, that you should serve only a certain number of people per year. And as a result of that, we haven't really seen much social impact. So for instance, we just celebrated the 50th anniversary of the war on poverty. The federal poverty rate was about 19% then, and now it's about 15 to 16%, depending on the measure, despite the fact that there's been a 10x increase in number of nonprofits and total charitable giving, roughly. So clearly that is not the answer. In the for-profit world, you have the Twitters and the Facebooks of the world that grow so quickly.
Exponentially, yeah.
Exponentially.
$16 billion on what app today, we were hearing. Yeah.
Exactly. And that's of dubious social value. We could grow the same way if we had the financing and the right mentality. I mean, I struggle, just the idea of saying we want to be a national organization, I get a lot of pushback. There aren't even a lot of nonprofits that have 3 offices in 2 states, which we do. And also, I want to say, there are a lot of amazing nonprofits just like us that are struggling in the same way to realize their potential to change lives.
Yeah, it sounds like it's not a critique of specific nonprofits and what they're doing. It's more the way the sector looks at itself needs to change, you think, to be more impactful.
The way it looks at itself, the way people look at it. That there's this notion of we're constrained in what we can do in the way that the free market isn't. Mm-hmm. I always like to say, if there ever is a place to take risk, it's in our space. Mm-hmm. If people are allowed to, JP Morgan is allowed to go out and sell all these collateralized debt obligations, why can't we go out and borrow $1 million so that we can invest in our growth? And yeah, maybe we'll default, but we have a plan not to. We'll pay 5% on that. Mm-hmm. And meanwhile, we're taking a chance to change thousands of lives. And
you also, the way you operate and your mission is interesting at Capital Good Fund. You wrote in the same Stanford Social Innovation Review, the new math of social change cuts through emotion and gets at a simple question: does a particular intervention actually achieve the desired impact? Why do you say that, and why is that different from what's come in the past?
Sure. So for a long time, the social change or the philanthropic model was based on warm and fuzzy and also just tradition. And warm and fuzzy doesn't necessarily solve a problem. So we're actually doing something called a randomized control trial. I'm very proud of this. We've partnered with Brown University, the Providence Public School District. We had a lot of great funders, including Rhode Island Foundation, help fund it. And we're doing a scientific study. So we're looking for, is there a causal relationship between what we do and the impact? We're looking to see if providing financial and health coaching to parents of elementary school kids will actually help the kids do better in school so we can break the cycle of poverty. But there may be a couple dozen nonprofits in the US doing this, and we may find that our program doesn't have the impact. well, that's great, because now we can readjust our model rather than just assuming it works.
And hoping it is doing what you want it to do.
Exactly.
I want to go back to the IPO a little bit. You mentioned trying to become a national organization and obviously getting capital, getting funding. Again,
Yes.
where you sound like a for-profit.
Yes.
We hear that all the time on this show. Tell me a little about the nuts and bolts of the IPO. How does it work? Do you have a goal where it's done? Is there an investment bank running it? How does it work?
Right. So this is just one of the mechanisms we're looking to use. So to be clear, this is not an actual IPO. We're not giving away equity or real shares in the company. What we've done is create a social innovation share, which is $25, and it's tax deductible, like a normal donation, but it also, you get a stock certificate, and you also get a voting stake in our organization. So each share gets you one vote to help elect a board member at our annual meeting. So it engages you in a unique way, and it's just to try to, everyone's trying to raise money, and you get a ton of pitches. So we're trying to get to the top of the pile and do something that really stands out in people's minds.
And I want to give people a sense of if they want to get involved. Obviously, they can do the $25. What else? What's your outreach to individuals where they could use your help or want to help somehow?
So for those that want to support us, you go to capitalgoodfund.org and you click the donate button, and you can donate, but you can also lend us money. And we'll pay 1% to 3%, and that will go towards our loan fund. So it's just a really neat way to invest locally, so we can make loans to low-income families. On the service side, if you want to get a loan or financial coaching or anything like that, you can go to our website. There's our services. You can also call us. It's 866-584-3651, and you can apply for a loan or schedule a tax preparation session, whatever you're looking for.
Only about 30 seconds left, Andy. So what, if you think about your organization in 10 years, where if it works as you wish, where would you be? How big would you be? What would you be doing?
Well, in 5 years, I want to lend out $100 million. In 10 years, I'd like to be serving at least 100,000 people per year, and I'd like for at least 90% of our income to come from, not from philanthropy, but from our interest, our fee-for-service programs, so that we're really a sustainable entity that's changing lives.
Think you can do it?
I really do. We have the people and the business model.
Well, we'll be watching to see if you're able to. Once again, one more time, the website?
Capitalgoodfund.org.
.org, okay, and the phone number?
866-584-3651.
All right, awesome. Well, Andy, I'm glad you're here. We'll have to have you back, and we'll be paying attention to your different kind of IPO from the kind we usually talk about in this show, but it's definitely interesting, and we'll want to watch that. You want to be sure to tune in next week when my guest will be Angus Davis, the CEO of Swipely, the tech startup in Providence that just opened a new headquarters on Dorrance Street that they're having the opening tonight, I think, actually. If you missed any of this show, or if you want to catch up on previous episodes of Executive Suite, you can catch them all on our brand new redesigned website at WPRI.com. And as always, I'll be back here next week, and we hope to see you then.